All right, so looking at the cash budgeting question from the 2018 ordinary level paper. So I suppose what are we asked to do here in this question? It's prepare a cash budget showing receipts and payments for 5 months from January to May, and then a total column as well. So cash budgets, incomings, outgoings, and then prepare a budgeted balance sheet as well, and then just a little kind of theory question at the end. So what information are we given? We're given a list of assets and liabilities at the start of the period. So some of these are going to come into play in the budget, and some of them are going to come into play in the balance sheet that we do for the end of the period. We're given sales and purchases, and we're given outgoings. So let's kind of run through these. So expected sales and purchases for the next 5 months are as follows. And then we're told all sales are on credit and paid for 1 month after sale. So if we're doing a cash budget, we're interested in when the cash is actually coming in. Okay, so the sales are 44,200 in January, but sales are on credit and are paid for 1 month after sale. So this 44,200 is received 1 month later in February. So that's going to be the February sales receipts. There's 89,400 for February, that's received a month later, so that's going to be the March sales receipts, and so on, okay? And that's the way all the sales are done. What about January receipts then? Okay, because the 44,200 is going to get pushed into February, so are we going to have no receipts in January? Well, no. If you look at the 1st of January, we had debtors of 82,100, okay? And they're going to go into January as receipts. Okay. All purchases are on credit and are paid for 1 month after the month of purchase, except 28 grand for cash in April. Okay. So similar deal with purchases then. So this 48,100 in January, they're actually February outgoings, because we're interested in when the cash moves, not when the purchase is made. Okay, so the 48,200 in February, we actually pay for that a month later in March, so that's a March outgoing. Okay, the one we need to watch for is just April. So this 34,700, 28,000 of that is going to be in April. And then anything else we can assume is going to be 1 month later as normal. So 34,700 take away 28 is 6,700. So that's going to go into May. The 28 is going to stay in April. Okay, so that'll kind of affect April's, and then May's will be a little bit different as well. Jack rents the premises for €42,000 per annum, payable monthly. So that's fine. If that's per annum, then it's just 42 divided by 12 is going to give us our monthly. So that's 3,500 per month rent. Equipment will be bought in March for 6,000 cash, so that's an outgoing of €6,000. Okay, so unlike in the profit and loss where we need to worry about putting it in the balance sheet and depreciating it, we're interested in when the cash actually moves in a cash budget. So March, 6,000 outgoing. Wages per month will be 16,400. That's an outgoing of 16,400 per month, straightforward enough. Closing stock on the 31st of May is expected to be 29,100. That's not a movement of cash, so that's not going to affect the cash budget. That's going to affect our budgeted balance sheet. We're obviously going to put closing stock on that as an asset. That's where our 29,100 is going to come in. Net profit for the 5 months is expected to be 51,000. So again, that's not a movement of cash. Okay, that's just what the net profit will be. And remember that net profit gets posted to the finance by in the balance sheet. So they're telling me that for the balance sheet, because I'm not going to prepare a profit and loss. So this one's for the balance sheet. This one's for the balance sheet. Wages per month will be 16,400. Payment, equipment was a payment. Rent is a payment. The purchases a payment. Sales a receipt. Okay. Do we have anything else? Up here, fixed assets. That's going to be needed for the balance sheet. at the end. Opening stock, I don't need it. It's not a movement of cash, so it's not for the budget. It's also not going to go in the 31 May balance sheet either. I have a new stock figure down here of 29,100. So that 32,000 isn't going anywhere. 31,200 cash on the 1st of January. My budget is going to need an opening cash figure that I'm going to kind of start from. So that's my opening cash. Liabilities then, creditors of 5,300. So a bit like pushing every sale into the next month means I was going to have a gap in January, and that's filled with the debtors being received. Same thing with the purchases. Okay, so the 48,100 purchased in January are going into February. So there's nothing there in January. That's where these creditors are going to come in. So that's going to be the January purchases in the payment section of my budget. Capital then of 400, that's needed for the balance sheet that you're going to do. All right, so we'll start into the cash budget. You could, if you want, turn your page and do it the other way, the other orientation, but I think you'll just about fit it doing this way. You don't have that many columns, so just January, February, March, April, May, and then a total. So I'm asked cash budget for the 5 months and a total column as well. All right, so first thing I'm going to put in is just a heading for receipts. And the only receipt I have are sales. All right, and remember what I said, January sales received is these debtors. Okay, so I'm going to have 82,100 here. And from then on, it's just pushing everything kind of into the next month. So January's are going to be received in February, 44,200, 89,400. March is in April's, in April, 88,100. April in May, 57,900. And then just be careful, my total is going to be different to this total here, because this total here includes this 81,600, doesn't include this 82,100. So just, you can do the total now, you can do all the totaling at the end, whichever you want. So I would say just do it now. So add the 5 of those together and you should get 36,1700. And then we're going to put in total receipts because there is no other receipts. Okay, so if there was other receipts, we'd kind of add them and then we'd get a total receipts figure. So look, I would say you'd get away without doing this total receipts, but let's just put it in anyway. So that's just there, just to kind of show you if there was other receipts in the period, I'd be adding those on and I would have an actual different number for total receipts. All right, next then I'm going to put in all my payments. Okay, payments then are purchases, rent, purchase of equipment, and wages. So the purchases is, so remember it's the 5,300 that were sitting there at the start. That's what I'm going to pay out in January. So 5,300 is the January amount. From then on, I'm doing a similar thing to sales, just kind of kicking everything into the next month's payments, just being careful when you get to April and May. So the 48,100, 48,200, putting February's in March. March's 42,300 are going to go into April. But remember, of this 34,700, 28,000 is received in April. Okay, so April's receipts are going to be the 42,300 from March plus 28,000 that we receive straight away in April, and that's 70,300. Okay. May's outgoings then are going to be quite small because the 34,700, normally I've been kicking that into the next month, but 28 is paid up front. So just 34,700 take away 28,000 is 6,700 is what's an actual outgoing in May. All right. Add the 5 of those numbers up and you get 223,600. What's next up then is our rent. So rent, 42,000 per year, payable monthly. So divide the 42,000 by 12 and I got 3,500. So that's just a 3,500 in each month. And add the 5 of those together and it's 17,500. Equipment then, so equipment will be bought in March for 6,000 cash. So that is an outflow of cash of 6,000 in March. So equipment, 6,000. No need to put anything in anywhere else. The total then will be 6,000 as well. Wages then is another straightforward one. So just per month, 16,400. So just put 16,400 in for wages. Add the 5 of those together, you get 82,000. All right, that's all my payments. If you want to leave maybe a space before totaling them, in case you're worried you're leaving one out, do. I know I've got everything here, so I'm just going to total them here. Okay, so this is one I do need to total because I've got 4 different outgoings, 4 different payments. So if I add the 3 of these numbers up, I'm going to get 70,200. If I add the 3 of these, 68,000. The 4 of these, 74,100. 90,200. 26,600 and 329,100. Okay, and that's my total payments. All right, so now I would skip a line and then I'm going to do net cash. So that's just receipts, takeaway payments is your net cash every single time. All right, you're going to add net cash to opening cash, and that's going to give you closing cash. And that'll be us done. All right, so net cash is just total receipts take away total payments for each one. So 82,100 take away 70,200 is 11,900. 44,200 take away 68,000 is a negative net cash, a deficit of 23,800. 89,400 take away 74,100 is 15,300. Take these away, negative 2,100. This, take away this, 31,300. And then the 361 take away the 329 is 32,600. All right, you could add the 5 of these together as well, and it should also give you the 32,600. Opening cash then at the very start. Okay, so you're going to get that from the list of assets they gave you. Okay, so on the 1st of January you had 31,200 in cash, so that's where that's coming in. And then it is net cash plus opening cash gives you closing cash. So 11,900 plus 31,200 is 43,100. The closing cash in January is then the opening cash in February. So the 43,100 goes up there. Negative 23,800 plus 43,100 is 8,300. Closing cash in February is then the opening cash in March, so it comes up here, 19,300. Add those together, 34,600. That becomes then the opening cash in the next month. Add the two of those together and you get 32,500. That comes up here, 32,500. Add the two of those together, 63,800. And then just be careful that when you get to the total, you don't just bring this one up, okay? So if you're doing the total column, the opening cash, all right, so this is the total for the 5 months. So the opening cash for that 5-month period is 31,200. It's the opening cash on the 1st of January. So this is January to May. So the opening cash is the 31,200. Okay, so really easy just to kind of follow your pattern and put the 63 up there, but it's actually back to the opening cash at the start of the question, and then just add the two of these together and you get 63,800. And here's where you get to check your answer, okay? Because the closing cash for the total for January to May is obviously the same as the closing cash for May. So these two answers should match. And if they do, you've got it right. You can be pretty sure. All right. I'll finish off then the budgeted balance sheet in the next video.